Hey guys.
Hey, there he is.
Hey, there he is. The man, the hour, the myth, legend, Jay Bhavnani. Welcome. Thank you so much for being here. And just to preface, hello, everybody. Thank you guys so much for being here. I'm Crypto Messiah. I've got with me my co host and dear friend, Random
R-
Task,
RT. Welcome, guys. Good to have you.
aka. And welcome to Frog Nation, the show that empowers people to access innovative DeFi products and free themselves from the burden of the legacy financial system. So, once again, thank you so much for being here. We already have 200 guests in here on our pilot episode, which is honestly more than I thought we were going to have. But look, guys, Jay Bhavnani. Jay, are you actually a teenager?
Yes, I am.
So that's not just a rumor.
In a few days, I won't be a teenager anymore. I'll tell you that much.
Okay, well,
Damn. There you
one
go.
you know what?
Happy almost birthday.
Beer's on me in 1 year. Then
Perfect.
mark your calendar, man. Until then, I'm your guy. Hit me up if you need a little sip. But anyway, you guys are nothing short of incredible, right? You're is your entire team just teenagers or what? I look, we don't want to spend too much time in this show, talking about your origins and all that kind of stuff because that's not what this is about. But it would be nice to kind of preface, the guests with a brief bit of history. What how did this happen, man? I mean, you guys are all stars. When I was a teenager, I was still just probably beating my meat and playing video games and like I couldn't have ever conceived doing anything close to what you guys have done. So how did this start? How did you guys learn how to code? How did you find yourselves here today? The leaders of Rari Capital. It's one of the most innovative products in DeFi. It's got over $1 billion in TVL. I mean, it's honestly just insane.
Yeah, thank you first of all, and thanks for having me here. Um, the origin story, I'm sure many people have heard it, so I'll just give a quick TLDR. Is I was working at a traditional startup, working for Sean Parker. Some dude tells me put all my money into Ethereum. Tell him no, that's stupid. Instantly get the crypto pilled like 2 weeks later after reading something Vitalik wrote. Then start trading shitcoins. Everybody wants to trade shitcoins. So build a mobile wallet. We were the first 0x integration. We were the first compound integration back when DeFi wasn't even called DeFi. End up being acquired by my crypto, where I stick around for about a year doing DeFi stuff, and then leave to start Rari Capital. And in that origin story of Rari Capital, it wasn't meant to be like this teenager starting DeFi, though that was a narrative that it took in terms of, yeah, fuck the banks. Yeah, we're going to be doing something better. And a big part of that is this exclusivity club that the banks and all have created. We don't give a shit about that, right? It's like, I don't know what half my team's real name is. I don't know what many people's, where they live, anything about them, including their age for a lot of the team. And I think that's what's exciting more than the teenage factor, is just the fact that we're working with people. Yeah, it's sometimes scary, but who I have no idea who they are, and they all have access to the exact same opportunities as one another.
And that really is one of the incredible things that we're witnessing in DeFi, right? I mean, the joke is that you can almost trust a guy with a cartoon, avatar profile picture more than you can trust a guy in a suit, right? And it's interesting how we arrived at this new paradigm, to where the whole kind of concept of trust and who has power and who has the ability to push these DeFi protocols forward. Like it is a new paradigm. It's something that's totally unparalleled. It's honestly it's never been done before. Rari Capital, really interesting story. Really quick, I actually, I bought quite a bit of RGT, and this was in December, I believe, last year. Of course, before you guys went to the fucking moon, like crazy to the moon, and I believe that was in early 2021. I got spooked, and I literally was the bottom. I panic sold my bag at the bottom. So joke is on me. I've sold quite a few bottoms, but full disclaimer, I did sell the Rari Capital bottom. So you guys can give me a hard time and rib me about that. When
We got to
I,
start the show off on a high. So
yeah,
our first guest will be the number one bottom you ever sold. Good to
I'm
have
sorry,
you.
guys. I'm a dirty bottom seller. It's not the first time. It's not the last. But when I found Rari Capital, it was interesting. I still remember navigating your web interface, and one of the first things I picked up on was everything was like super clean. And at that point in time, you guys were just a smart yield aggregator, right?
Yep, exactly.
So for the people listening that don't understand what that means, of course we've all heard about yield aggregators, YFI probably being the most famous of the yield aggregators. But Rari was competing with YFI and offering a product that was transparent, and that actually allowed you as the guy that's providing your money to the protocol to kind of witness what's going on behind the scenes. When trades were made, when allocations were shifted. Is that correct?
Yep, that's exactly it. And that's where we were working for more than 6 months at that time, right? The yield aggregator was our core product. And really what shifted it was we realized after liquidity mining stopped, we had distributed 88% of our token, our TVL dropped 90%, and we were like, okay, what now? Right? We didn't want to just be competing and iterating on the same strategies as Yearn, as Harvest, as and all of the other guys who started to launch around then. Everybody thought we were a fork. We said, look, we don't just want to be competing on the same shit that everybody else is competing on. Like we're in this space once. Might as well make the most of it and do something actually special. And that's really what made Rari what it is today. Is we said we want to control the entire stack, right? From capital onboarding into capital deployment, et cetera, et cetera. And we want to control that within our ecosystem. And that's where we're headed now.
So enter the Fuse pool, right? That is the flagship product now of Rari Capital. Probably most famous for the Fuse pool is Tetranote himself, benevolent Giga DeFi crypto whale. Can you talk a little bit about, before we get into what we really want to talk about, which is how can the people listening use your product to empower themselves? What exactly is a fuse pool, and why is it any different than, let's say, a compound vault or something like that?
Yeah, definitely. So each fuse pool is basically its own lending and borrowing pool, which may sound complex, but essentially it's just a series of assets, each with their own variables, which we can dive into down the road, that you can lend into the pool, meaning you supply it into the market and you can start earning interest, or you can supply an asset and then borrow another asset. There are a bunch of different use cases for why you'd want to be able to do something like those. But the biggest one that we've seen is leveraged opportunities, right? People who want to take out 2 times price exposure. And what that looks like is you supply an asset, you borrow the underlying, and then you go buy more of that original asset that you supplied. What that enables is you get much larger price exposure. So if the price moves up $1, maybe instead of making $1, you make $1.50, $2, I don't know. Depends on the variables of the pool again. And what this enables is you had these systems of a compound that enabled these lending and borrowing pools, and they did so very well, right? Massive respect for each of those protocols. But at the end of the day, it was up to the token holders to determine what assets you could lend and borrow. And in a world that we're trying to build where all of these systems should be trustless, where they should not have permissioned gates to any degree, we said, we want to try and build a trustless lending and borrowing system, and we don't want to limit whatever assets people can use. And that was really the motive behind Fuse is how do we create isolated markets of lending and borrowing? And within these, what that enables really is you can suddenly take out leverage on any asset. You can go and do whatever you want with these underlying assets. And you create one of the most powerful lending and borrowing mechanisms known to man, because at the end of the day, you can really do it with any asset that has liquidity on Uniswap, which is something that was never possible before, because if you did it on Compound or Aave, you'd jeopardize the risk of the entire pool at large, whereas here, these are isolated markets. And that's really the premise behind Fuse. Now what we're working on is a bunch of different upgrades to make it more capitally efficient, to make the lending and borrowing experience even better for the users, and to make the experience better for the pool creators who are creating these experiences where their users or whoever it may be can come and lend and borrow effectively into whatever pool it is that somebody may make.
That's incredible. What it's really all about right now, as you've created, these decentralized protocols of borrow and lending, I think, and a big part of what this show is about is trying to simplify and trying to empower people to get active in this stuff. And myself, admittedly, been in the market 4 years, only really started getting wet in DeFi in the last few months because AVAX and their fees. And I thought, damn, like this makes a lot of sense. So what are some of the problems you're seeing on your platform? You say you want to improve capital efficiency, make the user experience. Like what's one example of, perhaps a bottleneck you're seeing, or let's shed some light on maybe where some of the users are getting into your platform right now, maybe getting stuck, how you guys plan to make that a little more accessible.
Definitely. So right now what we're focused on is enabling the most amount of people to make as many new pools as possible. Because I want to see a bunch of new financial experiments. I don't know what'll happen when you'll be able to lend and borrow, let's say, a realty token that represents cash flows on your house. So it's how do we make the pool creators experience as easy as possible? And one of the biggest issues that pool creators have is bootstrapping their pool with cash, right? Because you need somebody to come and lend into the pool in order for somebody to borrow. But nobody's going to lend into the pool if nobody's borrowing, because that's a lost opportunity cost right there. So what we've been focused on is this new mechanism called plugins. And basically what a plugin enables is you can move unused capital from one fuse pool into another fuse pool. So what that means is, let's say I go and create a fuse pool right now with, let's say, REN BTC, WBTC, and all of the other BTC derivatives. And I now need cash into the pool. So I'll add FEI, USDC, USDT. I would usually need to go and wait for people to come and lend into the pool, and they're going to not be earning anything until somebody starts borrowing it. But now I can go convince people to lend into it and have a plugin that redirects the capital from my fuse pool into maybe Tetranode's fuse pool. So that way the lenders automatically start earning interest, so they don't need to wait for borrowers to make their transactions actually worth it.
Whoa.
That is
that makes a lot of sense.
let me ask, walk me through this, okay? Let's say that I was interested in spinning up my own fuse pool, right? Can anybody do it? You mentioned earlier, and I actually wasn't aware of this. I can actually create a fuse pool somehow with no capital of my own. Like maybe I just have a great idea, and somebody with capital, decides to come in and seed the pool. Walk us through that.
Exactly. So you come along, you get a cool pool name, you have assets that you want to help, or that you want to go and create the pool with. You go select those assets. You'll need to select some asset variables like collateral factor, reserve factor, some more complicated things. The people in our Discord are really extremely friendly and happy to help with all of these. And if you ever DM me, I'm also happy to help you at any time selecting your collateral factors and all of these details and explaining what they really are. But going beyond that, right? So you go set up the pool, and then instantly anybody can start lending and borrowing into the pool. One of the cool things that we've seen with Fuse across the entire board is that there are protocols like FEI, Frax, Inverse/Dola that are minting capital directly into the pools. So for example, something like Tetranode's pool, FEI is minting, I think it's above $5 million directly into that pool to enable borrowers to go borrow FEI at an extremely low rate. And I think that's really cool because before, right, all of these new stablecoins coming out, it's very hard to bootstrap demand. And on something like Aave or Compound, there's really no reason to use FEI over USDC or whatever, besides for maybe like a 1 or 2 bips in terms of interest rate. But Fuse is a playground for these new stablecoin projects to really take off and leverage off the demand to borrow against these long tail assets that aren't anywhere else. So it's a pretty simple experience, and our Discord's extremely friendly if you guys need help making a pool, and I'm always here if you need help as well.
So let me ask. I got a question about pool creators. If I just say I create a pool, I'm a DeFi nerd. I just want to get in there and play with some parameters, see if I can create this magic sauce. And it's popular and it hits off, and some people start deploying capital into it and all that. Is there a fee accrued by me as the pool creator? Is that something somebody perhaps with a low capital could go in and just gigabrain their way into some capital? Like, how does that work? Is there a fee to the pool owner, I guess
exactly.
I'm asking?
Yep. You can pick whatever fee you want. And really how I envision the long term of this going is the fee will be for projects themselves, right? The Fuse platform is a playground for various different companies and DeFi projects to be built on top of it. I see we have Kirk in the audience here. Kirk is working on a stablecoin project that leverages a lot of these ideas that we're talking about within Fuse itself to build his own project. right? So the admin fee, yes, will be taken by pool creators. That might be pushed down to zero over time just because of market efficiencies. But over a longer term, what will enable people to stay competitive with the fee mechanism is by building products on top of Fuse pools around use cases that maybe we all even can't even think of right now.
So this is also something that, let's say a DAO, has assets under management in its treasury, and those assets are just sitting idle, right? They're not really doing anything. So this is something that a DAO, can come interact with, create a pool and maybe create a money market around the assets in its treasury in order to generate cash flow for the organization.
Exactly. Yep. And Dan Elitzer was just tweeting about this the other day, but there's so many cool things that a DAO can do, right? Even if they want to earn cash flow for the organization just by lending out their assets, they can do that. But going even a step further, let's say the DAO is 99% composed of their native governance token, right? Now they can borrow US dollars against that and pay their contributors in cash in a way that they never could before. Right. And going even further, the DAO model, you can do everything that you need for a DAO inside of the Fuse platform. For example, the Master Chef staking contract that literally everybody uses, instead of going and staking LP tokens on whatever sushi or whatever it may be, you should start farming inside of Fuse, because then you give more opportunities to everybody, right? The idea here is, again, I know I keep saying this, but Fuse really is meant to be a sandbox and a playground for creators and builders to just come and have fun and figure out what they can and can't do. And whatever they can't do, we'll work with them on making it possible.
So I will say, your point about being able to deploy, a DAO being able to deploy its native token and borrow cash against that, that's actually pretty big, because that solves one of the biggest issues, in my opinion, in DeFi, and that's that you hear about all of these DAOs and they have these massive treasuries, but how many of these DAOs actually have treasuries that aren't comprised of their own token, right?
Exactly.
When we actually filter by that criteria, it becomes very few. So that does sound really interesting, just in the sense that it's going to enable these DAOs to come in, like you said, borrow cash against it, and then you can pay contributors, and you don't have to impact the market by liquidating your own token in order to fund your existing fund, et cetera, et cetera. Let's move on. I wanted to briefly discuss, because you and I actually spoke about this very, very briefly in DM, liquidations in your pools, right? For anybody that does or that isn't aware, when you are borrowing and lending, there is a liquidation risk, right? And that liquidation risk, is determined by, I would imagine, the parameters that the pool was initialized with, right? So just out of curiosity, who is responsible for the liquidations on your platform? Can anyone be a liquidator? And in the event that you don't have, some random keeper on the Ethereum network waiting, sitting around waiting for this liquidation opportunity, do you guys have fail safes in place as a DAO to, as a last resort, ensure that these liquidations happen and that the pools remain solvent?
Yeah, great questions. Obviously, liquidations are top of our mind. And actually, a funny story, when we initially launched the Fuse product to show off what Fuse could do, we created a Unisocks pool. And this was maybe in the first 2 days, or on the Unisoc asset, and that led to a liquidation to happen. And actually, the pool resulted in bad debt, which would have meant that lenders were not left whole, right? So we paid off that bad debt, right? We covered that ourselves, just personally, and we said, okay, what can we do? So we got really active in the liquidator communities, and what was clear is we should not, and no project should keep liquidations specific to an individual person or group of people. That is really scary. That puts the risk towards one person, towards one organization. If that liquidation bot goes down, it's not going to be a healthy market, and that'll screw a lot of people over. And at the end of the day, Fuse is meant to build on this idea of a free market, and we shouldn't be dictating how liquidations actually happen there. And as for like what we see going forward in terms of managing risk, and in terms of, okay, there may be a day with bad debt, what are we going to do then? Is we're working on a bunch of different solutions here. They're all in their very, very early stages. What I've been toying around with is almost this idea of, okay, what happens if you could basically tranche, like, you create reserves that are shared between multiple different pools, and then you enable the token holders to vote what tranche the pool falls into, right? So token holders don't really dictate much, but they will dictate the insurance or the backstop behind one of the pools. Honestly, this is no more than an idea in my head and maybe one or two Zoom calls. But these are the questions that we're asking today, because yeah, the pools and everything is healthy right now, but we all know that the current market's not going to last forever. We need to be prepared for a 90% drawdown in everything. And yeah, that might happen with a 50% drawdown in one block.
Okay, I'm going to ask the question because this is new to me, and I think it's probably new to a lot of people in the audience. I come from more of a centralized exchange background as far as trading and leverage goes. So in those cases, the exchange takes care of the liquidations, right? It goes beyond, where you're leveraged up to. It goes beyond your collateral. They liquidate it. In this case, and I'm just speaking out loud here based on what you just said, you've got the borrowers. They are borrowing from the lenders. The lenders are there to collect an interest on what they've lent out. But if those borrowers go beyond, perhaps they folded it or levered it up a few times, at the bottom of that move, the lender is not necessarily sitting there ready to take back their capital. You need a third player in the game, and that's these liquidators.
So the liquidators are the one who pays back the debt when it goes underwater, when it's about to go underwater. And it's up to the fuse pool creator to determine how much of a buffer they want to establish before it goes underwater.
Okay. And it's incentivized, like, for example, I want to go be a liquidator right now. It sounds like it's probably mostly automated by the way you mentioned bots, but I would be incentivized to do that. There's a fee kind of attributed to that as well.
And okay, the pool creator gets to figure out what the fee is, right? So if there are some more exotic wrap type assets, it's probably in their best interest to have a better or a higher liquidator incentive. But for most standard pools, that can be something in the range of like 6 to 8%. And I think that's the most popular range that we've seen in most pools today.
So this is all, very good information. But
yeah, appreciate that, walking me through that. Thank you.
To the alpha portion of the show, the main thing about DeFi, that I've witnessed is, you can talk about almost anything in the DeFi space, and people automatically assume that, you're some kind of giga brain, right? When the reality is that it's just not as hard as people think. The reality is also that it's intimidating, right? You come in and you're seeing these things like, VE curve and, YV3 CRV 48-LP,
V2, JSON error.
Come across as very intimidating. And look, I was on the ground floor in DeFi summer. Like, I've been doing DeFi for a very long time, but I still remember as a newer DeFi user, I was seeing all of these different, token names and things like that. And it was very intimidating for me. I honestly, I couldn't be asked to even look into it or research it, because I was just like, this is gigabrain shit. I what the fuck is this? It makes no sense. We want to talk about now, like, the alpha, behind Rari. We've talked about the protocol. We talked about who you are. Do you have any strategies, maybe, that you're willing to share with us today? And not just as a disclaimer, not strategies that you're recommending, but strategies, examples of things that, maybe people have done, with Rari to empower themselves. For example, I was able to self-finance my own house, with DeFi. And I think that's pretty cool. What are some of the things that you've been hearing that the community has done with your fuse pools, and what are some of the ways that people can maximize their earning potential, or maximize whatever they're trying to do in the DeFi space using your product?
Yeah, so I can't really speak for earning potential. I can speak for some cool shit that I've seen happen inside of Fuse. The first one is actually, somebody texted me the other day that they had a bunch of Ohm that they bought very, very early on. They put it inside of a Fuse pool in the Olympus pool party, pretty significant amount, and then borrowed Fei against it. And what did they go and do with the Fei is they put down a mortgage on a house, right? And it was in that moment that I was like, like obviously we always talk about building something greater than just servicing the 1% of like the circle jerk that we call DeFi today, right? But I think in that moment it was really something big for me, and realizing, holy shit, like the platform that we are building is single-handedly going to change many different people's lives throughout the world, inside and outside of DeFi, and whatever we do has ripple effects. And that just got me really excited. So obviously you could go put down a mortgage on your house using the Fuse platform. But beyond that, some other strategies that we've seen is obviously now Tribe is liquidity, or you have Fei Tribe liquidity mining their own pool. That's some pretty nice yields on single-sided staking for Tribe. I know that I'm in the pool, and I know that many of my friends are in that pool. Beyond that, the 9-9 meme has become real. Obviously, beware of your liquidation risk, but being able to lever up on Ohm in a way that you couldn't do on any other platform. And then beyond that, obviously the simple strategies of arbitraging interest rates between pools, capturing the delta difference between going from Aave to Fuse, doing all of these various different things. Some people are making a killing using Fuse. Some people are also losing money using Fuse. And obviously, what I'm focused on is I haven't really run many of these strategies myself, very few of them, in fact. And for me, the biggest alpha is in building and iterating on the Fuse platform itself, right? And whatever we're working on next. And I guess we can dive into some alpha there if that's what you guys are interested in.
Yeah, we'd love to hear, what you're coming next, but especially in the context of what it's going to, enable in the DeFi space. How people are going to be able, and why that's different than what's out there today.
Yeah, definitely. So I really dislike framing Fuse as a lending and borrowing platform. I don't really have a better name for it though, which is why we use it today. But when I zoom out and I think about Fuse and everything that we're working on across the entire Rari Capital universe, it really starts as, yes, a lending and borrowing protocol, but that's just the start, right? It's like there are multiple venture-backed businesses whose primary way of doing business is by building on top of the Fuse platform, right? The lending and borrowing service is just the start. It's just a lick into the sea. And right after that, what you'll see is this is really becoming a universe. I don't know what else to call it. And what that looks like, and different things that you'll find in this universe, are a stable coin built for Fuse, an NFT as collateral, and leveraging NFTs inside of Fuse, right? Uniswap V3 LP positions inside of Fuse, right? Fuse becomes almost like a prime broker of sorts to certain people, becomes a platform to other people. It becomes whatever it is that you need. And that's the goal of the platform, is making it this dynamic experience as possible. And then beyond that, the usual suspects of VE, RGT, and everything else there. But really, when zooming out, it's like, yeah, tokenomics are cool. We'll do all of that stuff. But what I'm more interested in is how many of these new use cases, just like new stuff that wasn't possible before, can we suddenly make possible by using the Fuse platform as the basis. And what we've learned is there are a lot of different things that you can do. So now it's about going and making those possible, which is what our entire task force transition is all about.
So you actually said one thing there that I found very interesting, and that was the mention of being able to collateralize your NFTs. I don't think people understand how revolutionary that is. That's, to my knowledge, something that really hasn't been done, at least to an extreme extent. How would that work? How is the liquidity sourced on this NFT? How do liquidations work on the NFT? Is this just a market that acts as a middleman, and and enables a borrower and a lender to transact, and sorry, my dog is going nuts, but that enables like a borrower and a lender to interact, and maybe there's some kind of like deal to where, hey, if this falls below a certain threshold, then this NFT belongs to me. How exactly does that work? Because just the implications of that are obviously enormous, but also, just there's a lot of challenges. The NFTs aren't exactly considered to be liquid.
Yeah, these are all things that we've talked through, and quite transparently, it's not even the Rari infrastructure team building this. It's one of the aforementioned companies building on top of us that are building this. And essentially what they've gone and done is they've set up a mechanism where you set up a price floor for the NFTs and you have a guaranteed buyer at that point who basically acts as a liquidator. And that's how you do the liquidations and make sure that the markets will also stay healthy. They're also exploring a bunch of other designs. I don't think that they're settled on this one 100%. I think that they'll roll out with like 4 or 5 different designs. They'll develop them all, and we can see in reality in the market which one works best, which one breaks, which one just leads to bad debt all the time, and which one will thrive. And I think that will be an interesting discussion to just see what happens.
Well, Jay, thank you so much for being here once again. We do want to change the tune for just a bit, and we'd like to open up the floor to our audience now. Frog Nation is a movement. It's about the people. So it's only right that the people that have dedicated their time to hearing you out, your fans, people that are interested in learning about DeFi, get to ask you questions. Now, before we do this, I want to just reiterate, we have a 0 tolerance policy for trolls. So if you get up here and you decide to make fart noises or whatever, you're out of here. Okay. As much as I love a good fart noise and a good fart joke, that's not why we're here. How this is going to work. If you basically request to be a speaker, we're going to invite you up here. I believe that 10 people can be up here at one time. Now, we are going to be respectful of Jay's time and everybody else's time that's listening to this. So please be mindful of that. When you ask a question, try not to be extremely long-winded. After your question has been answered, rather than getting into a conversation, it'd be amazing if you guys could just say, thank you, Jay. I appreciate your answer. If everybody, adheres to this framework, then this will go quite well, and hopefully everybody here learns a lot. So with that being said, I'm going to let RT steer the flow of this section of the podcast, and I'm going to move to a moderation role. Y'all behave.
All right, sounds good, guys. And if you've followed me for any time at all, I'm not afraid to ask what some might call a dumb question. Don't be afraid to ask those questions. I've already asked one today. What is a decentralized liquidator? So I've learned that today. And if you do that for a few years, you're going to be smart as hell. So don't be afraid to ask those questions. Get up here, Kapil.
Yeah, I just had a quick question. Joy mentioned about an app which was working on collateralizing NFTs. Could you please tell us the name again and tell us more about that app, please?
Yeah, so that app is called Market XYZ. They're building various different use cases on top of the underlying Fuse platform. NFTs are just one of the many use cases that they're currently exploring. Let me see if I can get their Twitter. I believe it's just at Market XYZ. Yeah, Market_XYZ is on. That's their Twitter.
Thank you.
Excellent. How about Joe Pett?
Hey, Jai. I got a question. If you deposit something in a pool as collateral, say a governance token, do you retain voting rights? And what I'm thinking of is like tokamak protocols buy tokes so that they can direct their own liquidity. Are they going to be able to deposit and still vote and direct liquidity through your pools?
So not for Toki right now. We're working on one-off cases where projects can enable that. Right now, that takes Toki's participation, and we're actually talking about that with the Tokamak team right now. But over a longer term, what we're working on is that mechanism that I brought up earlier called plugins, where you can direct unused capital from one place to another. You could actually use that same framework for voting, which means suddenly all of the assets inside of Fuse become governance enabled, which will have some really, really cool dynamics. It's up to token holders what they want to do with that. I don't know where it'll go, but it'll be cool.
Awesome. I want to butt in here and just ask something real fast, because I love the idea of collateralizing NFTs, but one of my concerns when you collateralize an NFT is that you lose access to certain groups, such as DAOs. Like, I hold an Ether Rock, and it would be cool to collateralize that. So I just want to throw up a suggestion. Like, it would be really cool when you collateralize it that you get back some sort of token that you can then be approved through governance, that people can then say, hey, that token's one-to-one. It's just a collateralized version of that asset. I still want to have access to this DAO. And they can approve that idea. And also, Jai, I've been here for a long time supporting Rari, so just want to say hi.
Thank you. I appreciate your support. As for that, yeah, we already have a system. So anytime you deposit into Fuse, you get back an F token. That's how the system works out right now. What we're actually focused in exploring is for any US residents that are paying their taxes, that's not always the best case. So we're actually working on a feature to disable the token that you get back to make it easier for everybody in the United States. But yes, Brian, 100%, like that is already a thing and it will continue to be.
Awesome. For the NFT thing too, for was it product market XYZ?
Correct.
Awesome.
All right, appreciate that. Rare AF with the frog, come on in.
Hey, yeah, thanks for bringing me up. Hey, Jay, big fan of yours and all of Rari's work, of course. Back in kind of the vein of market, I was wondering what's your kind of game plan when porting to other chains or other scaling solutions, I guess I should say, because I know Rari has looked at things like Optimism, but market kind of came in and said, hey, let's build this on Polygon, and they were able to execute on that. And kind of how do you see that relationship playing out? Like, will all of Rari's like ports over to scaling solutions be under market, or will it be picked and choosed, or kind of how will that all work out?
Yeah, great question. So first of all, market is meant to build applications on top of Rari and Fuse in general. Just the first project that they were doing was this Polygon deployment, but they will not be facilitating many other deployments of the underlying protocol itself. As for what our plan is for these cross-chain and cross-layer expansions, is I still don't think that we're 90% done. I think once we roll out these latest set of upgrades, once we roll out plugins, once we roll out reactive interest rates, I think we'll be a little bit closer to product market fit, right? Yeah, we have $1 billion TVL, whatever, but I still think that we're not quite there yet, right? And once we get to quote unquote there and close to product market fit, that's when I think we'll be able to develop and basically dedicate development time, development resources into maintaining a proper cross-chain experience. Because the last thing we want is to just spray and pray our deployments across every single chain and layer and have a subpar experience for our users. I'm fine with waiting and deploying the right experience. That being said, I think we'll have Arbitrum up in maybe like 5-6 weeks. Developers are working on that right now. We should have a few other exciting announcements here. We're active and really excited about ZK Sync, Starknet, everything that all these scaling solutions are doing. We just want to make sure that we do it right.
All right, thanks. That was an amazing answer. Well put.
Thank you.
A fine balance between move fast and break shit, and slow and steady wins the race. Appreciate that. Knug, you're up. Knug. With the sunglasses. Nope. All right. Circa.
Thanks, RT. And yeah, awesome talk, guys. Thank you so much for hosting this. I just kind of wanted to know what the current dynamics of wrapped rebase tokens are on your platform. I just struck up a pool. I'm big into rebase tokens and kind of the dynamics of them. And with Mimo coming to different networks in the wrapped version, and with wrapped Ohm kind of getting some more use cases, I just kind of wondered what you guys had planned with those, borrowing and lending against them. And thank you so much.
So wrapped assets obviously work inside of the platform. They're just a normal ERC20. As for rebasing assets, the Fuse platform only supports assets that exclusively rebase upwards. If the asset rebases downwards, it won't work, in which case we'll need to develop a wrapper token or figure out some other weird and funky way around it. And depending on the project and our developers' time at any given time, we'd be happy to collaborate on supporting the asset.
Thanks so much.
All right, Andy. See you there with your mutant lizard NFT. Do you want to hop in?
Hi, good evening. I hope people looking for alpha won't kill me, but I just want to ask you something a bit personal. How do you balance being so young and building cool stuff and doing important things? Like, do you think you're missing out on youth and hanging out with your friends that aren't doing such important stuff?
No, not at all. Honestly, I find it quite on the contrary, right? It's like we're doing the fucking coolest shit that you can be doing at this time and space and in history, right? The reason that I like to hang out with my quote unquote youths is because it enables me to withdraw from DeFi, which I think is healthy. Not enough people do it. Yeah, maybe I'll spend 16, 18 hours a day working. I need to go spend 1 or 2 hours a day away from my computer, not talking about DeFi. I think that's what will enable us as a team, and specifically me, to last longer than many other founders before me in the DeFi space, right? I have no intention of burning out. But as for your specific question, I find it quite on the contrary, and I think that the shit we're doing here is fucking exciting, right? The code that my team is writing, we have the opportunity to fundamentally change the world, that value is transacted, the way that the entire world works and the way that the entire world sees value, right? We can make any asset productive, and that's so fucking powerful, right? It's like, yeah, I'd much rather do this than go and smoke some weed in Venice Beach.
And push your buddy down the street in a shopping cart and he hits a parked car. Yeah. So that's the dumb shit I was doing when I was a teenager. I'm in my 30s now.
Exactly. As Messi said, we were all beating our meat and playing video games, and you're doing it. Thank you so much, buddy.
Yeah.
Thank you.
No, nice, good question there. Harsha, would you like to jump up? I can't read the end of your guys' names, so bear with me on the half names.
Yeah, Indian problems. So, philosophically, what Rari is doing is pretty crazy. It's not just free markets, it's like infinite markets. People can put up whatever and you can trade at scale. It's like what people did in like 1700s, and you're doing it at scale now. It's crazy. So what kinds of things are you thinking of like outside of Rari, if anything? And also, are you going to be at the Solana conference in Lisbon?
First of all, thank you. Second, won't be at Solana in Lisbon. And then thirdly, there's such expansive opportunities with Rari itself, right? It's like, I just said this, but like we can really make any asset in the entire world productive, right? And that's a really novel concept. And we talked about it during like the Fuse announcement and during that video. And since then, we've been focused on these DeFi assets. Yeah, we're probably going to be focused on these DeFi degen assets for the next 3, maybe 6 months. We're going to conquer this space. And then after that, really, the possibilities are wide open, right? What does it look like to work with a bank and make it so that you can automatically mortgage or get a mortgage on your house using your own and deposit your own directly into Chase Bank? Obviously, I know I'm talking something that's like many, many, many years away, but the point that I'm trying to say is like the things we can do with Fuse, we probably haven't even started scratching the surface yet. Right. And that's why I'm so excited. This is going to be one of the most fun financial playgrounds that we have ever seen. So I don't know. I don't have a clear path, but I do know that we'll be moving forward.
That's fair. Thank you. Honestly, I still don't fully understand the extent of Fuse myself because I don't use it on a daily basis. So just cool to see what your plans are. So yeah.
Thank you. And the best way to learn how to use Fuse is just by using it.
Of course. Yeah.
It's given me Lego vibes. You know, everything you've described today is really like a plumbing, financial Lego. And so it's really a matter of getting builders around to see what they can build with it.
100%. And that's what our entire task force transition was about, is how can we set up a system such that we attract the top builders in the space to come and work with us and build the future with us.
Love it. Red Car, GRE, can't read your name there. What do you got?
I saw something earlier about Rari and Cozy with a $500,000 cap at making 20% on stable coins, and you could protect it to get 18%. Could you just explain that more and how? I'm not sure if Fuse is out. I missed the beginning part of this, but what app is that through, or DApp? And could you explain a little bit more on that? Thank you very much.
Yeah, for sure. So Cozy is an insurance mechanism they've plugged into our yield aggregator to offer insured yields on top of the yield aggregator. Our yield aggregator deploys capital into various different Fuse pools, including Tetranode's pool. And what Cozy's done is created a product where anybody can deposit. It'll go and access those yields. It'll take a piece of those yields, and in turn, you get insured yields, which is really, really cool. honestly, I've yet to play around with it because the announcement just came out a few hours ago. But I love the team, and I'm really excited to play around with it later tonight.
Yeah, I just saw that come out a couple hours ago, and one of the guys I follow for a lot of alpha saw that, and I was just mind blown that you're insured and protected, making 18% on stable coins. Like, what bank in the world does that now? Like, you're leading the charge.
Yeah, I need to ask a clarifying question on that one. That was huge. You say insured yields. Is that insuring your principal as well?
Correct.
So right now, I've got a bag of USDC. I can go stick it into that pool with Cozy Insurance and get probably what's going to get, we like to say people come and shit in your pool. Like maybe that 18% goes down a bit, but like double-digit yield on a stable single asset staking insured right now?
NFA, but sounds pretty promising.
Yeah. Okay. No, I'm genuinely sitting here learning with these guys. I'm not, it's not like some plan to be like, get over there. But I want to look into that. Okay, cool.
If I could just jump back in there one quickly again.
DeFi come on in. The guy who doesn't knock at the bathroom door. I love you.
Yeah, what's up, guys, again? I just wanted to kind of ask one last question because I was curious to hear from you, but what are some DeFi products that you're interested in seeing come to fruition right now?
Yeah, great question. Honestly, I tweeted about this earlier today. The product that I'm most excited to see come out right now, and this is partially because I was just with the founder for the past 3 days, is Sense Finance, right? What that's going to enable is it's like we built like level 1 is Uniswap v3, right? Then Fuse came out on top of Uniswap v3 and enabled you to lend and borrow any asset on top of the mechanism that Uniswap built to trade any asset. What Sense is going to enable is for fixed interest rates on top of any asset by building on top of Fuse, right? Again, this links into this Lego analogy. This is another Lego piece, but this is a Lego piece that's built on top of our Lego piece, right? And the permutations that you can do with these Legos is going to be really, really cool. The buildings that are going to be created are going to be fucking beautiful. Don't exactly know what they're going to look like, but they're going to be fucking cool.
Yeah, that's a weird thing because doesn't 88 miles per hour also do fixed interest too? Like, have you guys thought of working with them too?
100%, right? We're going to work with all the different fixed interest rate providers. Haven't spoken directly to the guys at 88 miles per hour, really, but like the goal here is like let's enable the most amount of tools in the toolbox to be built on top of us. Let's enable the most amount of buildings in the universe to be built on top of us. And that's really what our job is, right? So we're happy to talk to any fixed interest rate provider. Again, just excited about this one because I was with Kenton for the past few days. But there's going to be a bunch of really, really cool applications that are going to be built on top of all of us.
Dude, awesome. Let me know if you ever need me to connect you with any other DeFi developers.
Appreciate it. We're always hiring for Solidity. So if you have any Solidity engineers, happy to take
Definitely have a lot. It's in my bio, and I've been getting a lot of messages recently from people, so can definitely hook you up.
Appreciate it.
All right, and we've got Demos.
Yo, Jai, thank you so much for taking the time. I hopped in towards the latter end, so apologies if you already covered this, but what Oracle solutions does Fuse utilize just to determine spot price, and obviously that has implications on liquidation rates and whatnot. But also, how do you handle that as well for NFTs, right? If NFTs are being collateralized versus ERC20s, like where are you getting this data from?
Yep, great question. So for ERC20s, we're going to support the most amount of Oracle as possible. So anybody could go write their own custom Oracle, and if they're a pool creator, they can select it. What the oracles that we support out of the box include Uniswap v3 TWAPs, Uniswap v2 TWAPs, Sushi TWAPs. We wrote custom oracles for stuff like addressing urine vaults in M-stable vaults. What are some other things that we have? Obviously, we have Chainlink. And then for NFTs specifically, it's going to be using some sort of auction mechanism. Again, the market team can speak in more depth about this. And like you can bid, and your bid will basically determine what the liquidation price does look like because it'll determine whatever the asset is worth. But what I will say also is over the longer term, right? I think that we're going to have thousands of different oracles for any asset on the blockchain and off the blockchain, and that's what makes Fuse so powerful, is that you can limit the oracle risk on a per pool basis in a very, very beautiful way.
Awesome. Thank you so much.
Thank you.
Great question. We've got
really quick.
Yeah, go ahead.
Just to be mindful of Jay's time, he does have to get out of here in about 7 minutes. So we will be accepting a maximum of 2 more speakers. So if you'd like to speak now, please request permission to speak, and I will add you. After that, we cannot be accepting any more. Thank you.
All right, you've got Lightning Comet. Come on up.
Comet Shock.
Comet Shock. Comet Shock. There you go. This is like doing attendance when I used to be a supply teacher. I'd be standing there just like, Jay Quellen. All right, come on up.
Yeah, longtime supporter of Rari. Interacted with Jay a lot. Jay, can you speak to how all these listeners can get involved in the community and talk about the grants program a little bit for them?
Great question. So we have a very, very large grants program. Honestly, if you're just working on something cool that's building on top of Rari, I'll just give you our GT personally, no strings attached, if you can help make it a reality, right? Like literally shoot my DMs if you're building something cool or want to build something cool on top of Rari. I'll connect you with the right people. Inside the Discord itself, when you join, you'll find a bunch of different task forces on the left side. Right now, they're actually putting together an education task force. So if you want to help spread the word about Rari throughout the ecosystem and help educate within our Rari ecosystem, then join the education task force, right? There's a bunch of cool incentives, a bunch of cool stuff going on there. If you're a builder, DM me, join the Discord, start asking questions, start building on top of us. We'll get you plenty of our GT in your hands. Obviously, we'll figure out whatever it is that you need there to build something cool enough. And yeah, honestly, we want people of all types, whether you're an artist, whether you're good at comms, whether you're good at just talking to people. Let's get you into the Rari community. Start joining in the Discord, which you can find at Rari Capital on Twitter's under the Twitter under the Twitter bio. And let's get you working within the Rari Capital ecosystem, right? It's like we are what make this project, or we are what make this project die, right? And we want to get the best people together, the smartest people together of all types, and build a future together.
And that's what it's all about here. And, really a big part of this podcast that we're putting together, this Twitter space, is, getting people active in DeFi and, dispelling some of the gray area and the fear perhaps. And so, inviting people right into get into action is beautiful. And I like that you have an education section, because that's the big blocker that I see. And then as we come into our last question here, we've got Charlie. We're not going to disappear right after this question, guys, so stick around if you would like, but you're up.
How you doing, guys? I don't understand DeFi too much. That's why I'm pretty much on Celsius, but I was hoping you guys could tell me, what the DeFi project a noob could get in with limited capital. Thank you.
Yeah, great question. I think that there are a bunch of great options out there. If you want to just start earning yield, right? Start earning interest on whatever US dollars or crypto assets you may have. Some great options to look at are Yearn, obviously Rari Capital, the project where I work. We have our own vaults as well. You have other people like Harvest Finance. I would really suggest spending the time, taking the time to research this if this is something that you're interested in, and figure out which one you vibe the most with, right? And once you've gotten into the yield aggregator, that's kind of what I'd consider dipping your toes into the water. Then you start exploring some of the more complex products like compound finance, Aave, and then one day Rari Capital is Fuse, and you just make your way down the rabbit hole.
Absolutely. And you mentioned earlier cross-chain at one point. Obviously, when I hear somebody talk about having low capital, I cringe when I think of ETH fees. And I know that can be really, a big roadblock for a lot of people when you make $500 of yield over a couple of months, and then you go to pull it out and it costs you $400. Do you guys have plans to sort of set up? I believe right now you're built on Ethereum, obviously. How do you see yourself in that fee sense, and what plans do you have to maybe access other chains or L2s?
Yeah, I would say the big thing here is we don't want to rush it. We want to do it right. We want to give it the proper attention. So once the product is really in a more stable position to the point where we're not pushing updates once every 2 weeks, then we'll really start going and do this and giving each of these deployments the proper attention that it deserves. But I agree, Ethereum is very difficult to sit on right now and be a user of because of the high transaction fees. But I'm extremely hopeful for all of the different layer 2 solutions that are coming out live over the next few months, including ZK Sync and the rest. So I'm hopeful for the future on Ethereum.
Absolutely, and it is unfortunate, and it is a function of popularity, so it's not a total knock, but it does price out a lot of the people that, you know, DeFi is really, we're hopeful can empower and kind of, you know, pull them out of this sort of under the thumb of big banks. So appreciate your time today, Jay. I think Messiah here probably has a few, you know, wrap up comments
I
for you
actually
specifically, and
I actually have a quick question for
yeah.
you, Jay. This is something I've been wondering as a potential user of your Hughes product. You know, people have memed me. You know, I've been labeled as the incoomer now. So something like Rari Capital, right, is right up my alley. When I'm looking at these Fuse pools, you know, there's a couple of things that are a bit confusing to me. One of those things are, what are the differences between a verified and unverified pool? My bad. And then also, you know, what is this pool risk score? You know, how are these risk scores assigned, and what do these risk scores represent? You know, is F considered a high risk pool, and what makes a high risk pool a high risk pool?
Yep, great question. So the verified versus unverified pools, verified basically means that governance has blessed it, right? Governance has blessed it enough to put it on the main page. I think that there are a bunch of different reasons on why governance would verify or not verify a pool, but a lot of it comes down to is the pool secure? Does it have a multi-sig behind it, or is it just one user on an EOA that's going to rug everybody in the pool? And then as for the pool risk score, that looks at a lot of different things inside of the pool, right? For the more sophisticated users of the platform, they probably aren't going to be looking at this because they can deduce their own risk score themselves. But what this is looking at is it's looking at the assets inside the pool, how volatile the assets are, how volatile like every single piece of the pool is, to try and figure out what are the chances that the pool has bad debt. And that's how the pool risk scores are derived. What I will say is that it's a somewhat outdated mechanism. This was initially written maybe 6 months ago. What we should be shipping, and I saw Henry was here, Henry from our team actually has just finished rewriting the entire risk score system, where you can hover over it, you can see in depth how that risk score is being produced, you can see a per asset risk score, right? Our goal is to just inform people, not to stop people from doing anything. So as long as people can get the best understanding of the risk before they enter into a pool, that's all that we care about, and that's what the risk score is about doing.
Fantastic. Thank you so much. And to everyone that, you know, came here for our pilot episode, seriously, we appreciate you so much. You know, RT and I are really, really looking forward to continuing this series and taking it forward. Now, if you did miss the beginning or you did miss sections of this, keep your eyes posted on my Twitter and Random Tasks Twitter, because this episode is going to be available for streaming on YouTube, Spotify, and iTunes. So if you're a podcast guy, you want to re-listen to it, you want to hear the magic alpha that Jay has dropped tonight again and listen to it over and over and over again, you are more than welcome to do so. But Jay, dude, thank you so much for being here. I'm honestly honored that you were our first guest. I mean, what an incredible first guest to have. You know, a guy that, as you said, you know, one of my favorite questions you had tonight was, you know, just about how do you feel about missing your teenage experience, you know, this and that. And I loved your answer, because as somebody that's also extremely passionate about crypto, I literally just can't get away from this shit. This is what I do for fun. You know, all my friends are frogs. So it just kind of is what it is. But guys, thank you so much for being here. Go check out Rari Capital. You heard from Jay himself. You know, if you do have any questions, please reach out to them. Check out their Discord. Don't be afraid to ask. Okay, there's no such thing as a stupid question.
And if I could, guys, I would just say my final thoughts today is get involved, get get your feet wet. ETH fees can be limiting. So I will admit, sitting here saying, oh, if you have $100, just, dip your toe in. It's a little tricky. But it doesn't mean you can't play around on other chains, wherever you can access this stuff. You don't have to ape into anything, right? You can dip your toe in, you can collect data on a low yield or high yield DeFi strategy on a small chunk of whatever you've got, and just collect that data and find your own alpha. It's very hard to get into this stuff based on secondary resources. So I would say get in there, primary research, and really, I've started doing it in the last few months, and it's just grown to be quite a fascination. And if you want to interact with some of the bigger names in DeFi, stick around and join us on the next space. We're going to be having these each week. Next week, we've got Daniel Sesta. Oh, I messed his name up. He's never going to forgive me for that. And he'll be in here. And so, yeah, we're going to do an interview. We're going to chat with him. But it's really an opportunity for you guys to raise your hand, get up out of the crowd, and ask whatever question it is you've got. Connect with these people like we did with Jay today. Jay, again, thanks for your time, and really looking forward to what you guys have. I've been red pilled now. I've got to go check this fuse pool stuff out.
And guys,
yeah,
we free. Go ahead, Jay. I didn't mean to interrupt you, man.
All good. I was just gonna say thanks for having me. Honored to have been here for the pilot, and looking forward to listening to next week's episode.
We'd be honored to have you here. I hope you come to ask Daniela some questions.
All right,
I will.
Nailed it.